I'm going to be explaining how I took this USD JPY trade at during the NY session. So let's look at USD JPY from a perspective all about longer time frames. So yesterday we established that essentially USD JPY went back to the 50% level of here. So let me just remove everything. Okay, so what can we spot? So whenever you have the chart, okay, just make sure that you mark out the important things that you need to know. Okay, so we see a consolidation here. Okay, we also see a buy side sweep. Okay, and if I put my Fibonacci here, right here, I can also see that this is the 50% level. Okay, so once we saw that CPI came, the price pushed down, and also one second guys, let me just do this. Perfect. So the price pushed down, okay, but the price, where did it push down? It pushed down to the 50% level of the previous range. Okay, so let me show you guys. So this was also a range, okay guys, so obviously the price pushed down to the 50% level of this range. Okay, now once the price pushed back up, this was on Wednesday, okay, it went back to this level of the 50%, and like I said, once it reaches the 50%, it's going to start to consolidate again. Okay, so that's essentially what happened. Okay, now we have another consolidation. So now yesterday, last night, we saw this big impulsive move which led to the price breaking out of this range. So like I said guys, when there's a range, there's orders above and below. Okay, so if I mark the 50% level of this Fibonacci, okay, I can see that essentially the price last night, it went up and then it will retrace back right now. So right now it's 12 o'clock and the price is just not doing much. Like if you go on the 5-minute chart, you can see literally after that impulsive move that happened in Asia, and then also a London session when the price dumped, okay, that's basically what happened. Okay, so as you can see, this is also a consolidation and the price just moved down. So that's so far what's happened. Okay, and I told you also guys that I only trade after 3 p.m. because I just want to know what the price is going to do, because right now it's just hovering around the 50%. So that means that basically it's just consolidating. Okay, it's not doing much. I can't really take a trade because I don't know whether it's gonna fill in this price level, or more than likely, okay, because like I said, there are orders above and below. More than likely the price is going to go down here, and also most likely is going to fill this fair value gaps that we see above here. Okay, my trading view is a bit slow today, sorry about that. So there's a fair value gap there. There's also a fair value gap over here. So fair value gaps, let me introduce you guys what fair value gaps are. So fair value gaps are essentially price point where the price moves so fast where essentially there's a gap in orders, meaning that those orders are not filled. So when you see low volume like this where there's a wick, so wicks means that the price has been filled. When the candle's body is actually larger and there's no wicks, it means that it hasn't been filled. Okay, so what does that mean? It means that the price has been filling properly, like over here. So all the prices have been filled. So this price, as you can see, wasn't filled properly. So that's why when it came down, it just filled it so fast. Okay, so now my assumption is that now that a buy side sweep has happened, most likely it's gonna go down over to these levels and fill in these imbalances. Okay, so now let's talk about yesterday's trade. So let me see at what time I entered, guys. Okay, just bear with me. Range. So I've entered somewhere around here. Okay, so let me go on a 5-minute time frame. So yesterday, so now there are ranges within ranges as well, guys. Okay, so I'm gonna clear this up and explain to you guys what the logic is as well. Okay, once I saw that essentially price was also consolidating over here, right, as you can see. So let me just make it in a way that you can see. Okay, so that's a range within a range. Okay guys, you need to be very you need to spot this very carefully, because trading is very real time. So if you miss it, you're going to just miss the move, and in trading, timing is very important. Okay, so I saw that this price was essentially ranging, and at 115, when the news came essentially yesterday for jobless claims, I believe, that's when the price shifted all the way down. And what happened was that all these orders were taken out. Okay, and this is what I call a LQ print essentially. So it's basically like a trend line. Okay guys, so the validity of that was the fact that it moved very high volume. This is a 5-minute candle, so as you can see, the price moved very heavily and then it retraced back up. Okay, so now, and that was NY session. Okay, so like I said, I trade after 3 o'clock, so let's just mark a 3 o'clock line. So this was my analysis so far. I saw that there was a consolidation over here and the price moved down. Okay, now I'm waiting to see whether the price is going to break out of this range or is going to go up. Okay, so, and what I mentioned before, when there is a consolidation, there are orders in both sides. Okay, so now that we saw that the orders were taken, now I'm looking for a buy side sweep. So let me write that down. Sorry, sell side sweep. Okay, so I'm looking basically for the orders to be taken over here. All right, but what does the market actually do? That's the logic, right? What does the market actually do? Okay, so this is where essentially I entered my trade. Okay, 345, sorry, my bad, my MT5 numbers are a bit weird. So now the logic is that the price should sweep this level, right? But if I put my Fibonacci in this range, right, I can see that the price came back to the 50% of this level. And also the price has left a very high FVG. Okay, so it left a fair value gap starting from here at 1 o'clock. So I marked my, fair value gaps from the start of my candle to the opposite candle. So that's why I mark it over here, because the blue candle. Okay, so now, but what's the validity of an FVG? So when it's retested and it goes against it, that means that obviously the price is going to continue. But what happens when the fair value gap actually gets filled? That means that this sell orders got filled. Okay, so that means there's a lot more sell pressure. So right now is not the time for the market to basically break this level. Okay, it means that the market took more sell orders in order to push the price down. Because if you look at it, technically in this range, this is still not a sweep. Okay, because it's still quite small. Okay, because when you look at it from a 5-minute perspective, yeah, that's fine, but it didn't take as many orders as it should have. Okay, so that's also something that you need to learn. You need to understand how far is the liquidity in this market, and in this case, well, it was over here. Okay, obviously there is a fair value gap here, there is a fair value gap here, but what's the immediate liquidity? That's what the banks look at. They don't look at the chart that was like 2-3 days ago. They look at the immediate price. Okay, they're trading in real time. So what was my entry? My entry was 156.92. okay, so let me show you guys what my entry was. Okay, so once I saw this fair value gap, okay, it came down. Okay, 1 second. So it got filled first of all. Okay, but I was still unsure as the fact that is the price actually going to go up or not, because that's the sort of bias I had. But that's a mistake also in the trading world. You cannot just have a bias, because you may miss out on opportunities like this. Because if I was just looking for buys, then I would have just get taken out, to be honest. Okay, so what happened? I saw that the market pushed down and it retraced. It respected this level. Okay, it respected this level, and that's essentially where I took my trade. Okay, I took it at over here, and I had a, let me check, I had a 15 pip stop loss, and my target realistically was 65 over here. So that was almost a 1 to 2. Okay, but what happened yesterday? I actually closed my trade early because once I saw the market was pushing down, okay, and I saw that essentially it wasn't reaching this level, because once I saw these two taps over here around the 70 mark, I actually closed my trade early, because what happened was that it was late in the evening. Okay, it was late in the evening, and I wasn't sure that there was enough liquidity to push the price below these levels. So what did I do? I just closed my trade and I banked $300. But my actual analysis, which was for the buys to happen, it actually happened afterwards, because last night around 4 a.m. that's where there was a massive liquidity grab, and it broke the all-time high actually. So of this range, that is. Okay, so now obviously we're in a position where the price came back to the 50% level, and now we're just waiting to see essentially what's going to happen after 3 o'clock, and I'll update you guys tomorrow regarding what's going to happen, whether this range is gonna, whether it's going to sweep all the way down with today's news, or whether it's just going to stay around this level until Monday, and it's gonna continue with a consolidation, and we're just gonna start the process all over again. As you can see, guys, look, one consolidation, two consolidations. So essentially there's a lot of cycles that you need to just be aware of, and making sure where is the liquidity that is not grabbed. Okay, another reason why this price went over here is because there were orders here. Okay, they weren't taken. So that's why when there's one consolidation is swept, okay, but then another consolidation was formed, and that means that there were orders in both places, in 1 and 2. So that's the reason why the price broke, okay, over here, because there was a lot of pending orders like sell limits, buy stops and whatnot. Okay, so now where's the logical place where there's no orders taken? Well, is this place here. This is the place. So in number 3 is basically where there's no orders being taken. Okay, that's where the liquidity lies. So essentially liquidity is like a magnet for the price. Okay, so that's essentially most likely what's gonna happen. So as traders, we are reactive, we're not predictive. That's why I haven't entered the sell, because how do I know the price is not gonna go up to take more sell orders and then fall? Okay, so that's the that's one of the tips that I'm going to give you guys. Do not be predictive but reactive. Look what the price is doing and react based on the available tools that you have. Thank you so much for watching this video. If you have any questions, please let us know.